Good morning everyone, this is Abid Khan and you are watching Karachians Academy YouTube channel. We have started a series of videos on past paper solutions. So today we have selected IGCSE past papers of multiple choice question, paper 0452, paper 1 and its version 2. We have selected the latest attempt of May-June 2022. So let's move on to question number 1. Question number 1, which task should be carried out by a bookkeeper? Comparison of financial statements, preparation of financial statements, provision of information for decision making, recording the financial transactions. Actually, just I'll give you a very brief. First of all, books of prime entry, or we call it books of original entry. This is maintained where the initial transactions are recorded, then data is moved to general ledger, and then it is moved to trial balance, and then from trial balance you calculate financial, make your financial statements. So this part of the financial statement, this is called reporting part, where a senior accountant or senior manager, he prepares the reports on financial performance, right? Means the profit and loss account and the financial position, and reports to the management or the shareholders or the. So this is this is done by accountant or some senior member. So this part from initial recording till trial balance, this is called bookkeeping. This is called bookkeeping. So this is recording part. This is recording part and this is reporting part. This recording part is basically done by a lower level peoples like clerks or accountant. But the higher level part is done by the manager. So let's see what question is. So which task should be carried out by the bookkeeper? So bookkeeper will do these things. Comparison of the financial statements between years, no. This is done here and this is done by the manager. Preparation of the financial statement, this is the preparation, this is done by chief accountant or the manager. So this is also not applicable, this is also not. Provision of information for decision making, no. Decision making information is given by the managers to the senior management, so this is also not applicable. Recording financial transactions, yeah, this is here in book of original prime entry, books of prime entries, this is done. So your answer is D. Let's move on to question number 2. Following ledger account appeared in Lee, a trader. Lee is a trader and this has appeared in his account. So Lee, a trader, and you see Amre's account. Amre's account. So it has a credit balance and there are purchases appearing. Means this Amre's is a supplier. So we can say supplier account, or he. So we have to pay him, or we can say this is account payable, or we can say this is creditor account. Following ledger account appeared in the books. So what is required? Which statement is correct? So you see, this is Emre's account, and Lee in this is Lee books of Lee. So he's a trader, he's maintaining, he has to pay. So these are the purchases, right? Purchase returns, bank. He has made payment to him. Discount he has received on this. So this is a basically discount received. He has received this discount on, and this is basically a cash discount, right? So cash discount at the time of settlement when we receive. So this is cash discount, right? Which statement is correct? Amres, I think again some problem in the sheet. It is not stating. Amres allowed Lee 100. So this discount is given by Amres to Lee. Lee has paid, he was to pay 2000, so he has paid 1900 and 100 he has got received the discount. So, and who has given this discount? Amres has given this discount, 100 discount, but he is saying trade discount. So this is not a trade discount, this is a settlement discount. So this is not applicable. No doubt he has received the discount, but it is not a trade discount. This is a cash discount, which is a settlement discount. Emrate owed Lee 2100. No, Emrate is a supplier. He does not owe, but rather he has to receive money. So this is also not applicable, right? So the Lee of Emrate 295 on 30th of April. Lee opt, yeah, this is something correct. Lee net purchases from Emrose is in April was 2900. Net purchases was 3000, right? And purchase return was 150. So net purchase was 2850. So this is wrong. So this C is correct because Lee is liable to pay. He owes 2900 to Emrase, right? So option C. So we have done with question 2. Move on to question number 3. So Sarah has sold, just 1 minute. So Sarah sold goods on credit to Zafar, right? How was this recorded in Sarah's ledger? So this is on credit to Zafar, means Zafar, ideally speaking, Zafar should be debited, right? And sales should be credited. Whatever the amount is there should be the entry. So how was this recorded in Sarah's ledger? Because this is the Sarah's business, Sarah's ledger, so in sales ledger, right? So this will be the individual account. This is one is a general ledger and other is a sales ledger, and sales ledger means this is individual customers ledger, right? And general ledger, so A in sales ledger, so number one, Zafar is an individual person, so his individual entry will not be you cannot pass here in, you cannot maintain its individual account in general ledger. Number one, you know he is in sales ledger, Zafar account. So in sales ledger, yeah, in individual ledger she will debit Zafar account. This is right. And credit general ledger sales account. Yes, this entry, this will be posted to general ledger, and this why? Because in general ledger you cannot pass individual entry, you have to total entry. So you cannot pass this entry into the, so this A option uh, seems fine. So if we B sales account debit, no. Credit Zafar account, this is absolutely wrong. So debit sales account has nothing to do in sales ledger, because sales account is maintained in general ledger, right? So sales account in maintained in general ledger. So this is sales account, this is not applicable, only these two are applicable. And so if this is not applicable, then it is not, it is not, and it is not. The option A, right? In case of any clarification, you can write to us, and we can try to quickly respond you. Now move on to question number 4. What question number 4 says? Question number 4, Umar sent a credit note to Miriam for goods returned. So we know very well, when your Umar, how would Miriam record these transactions? If you see from Umar point of view, what the Umar books. So Umar, how he will record? Because he is returning the goods. So this is his purchase return. So he will purchase return, he will credit. If I am saying 1000, then he is returning to Miriam, so he will debit Miriam. And how Miriam will record? In her books, Miriam books. This is a purchase return for Umar, purchase return for Miriam. So sales return, she will debit by 1000. If this is an arbitrary amount, and what? And he will credit Umar. So Umar sent a credit note to Miriam for goods return. How would okay? So Umar has sent sales return good. Okay. No, just one thing. This is not the case. So case is very carefully we have to read. Umar sent a credit note. This is Umar book. And this is Miriam books. Umar sent a credit note. Umar is crediting Miriam, right? So when he will credit Miriam, Umar sent a credit note to Miriam for goods return. So Miriam has returned goods to him. You know, when he would have sold, so at the time of selling goods, he has debited. If I am saying 2000, and 2000 says credited, right? So he has debited him, right? So now he has got some goods returned. So returns, he will debit. If I say 1000, and he will credit Miriam. So that is why he will issue a credit note. So when he will credit his account, then he will issue a credit note. So when this will comes to the Miriam, so this will basically a purchase return. What this says return to him, it was the purchase for Miriam. Is the same entry was a purchase. The sales of Umar was purchase of Miriam 2000. It was, this is just for your understanding. When Miriam is sending these goods to, it is a purchase return of 1000, and he will debit Miriam. So Miriam will issue a debit note because he is debiting his account. So when the goods will come to Umar, Umar will credit his account and will issue a credit note. So what will be the entry accountant? How would Miriam record this? So we want to see in the Miriam book. Purchase returns debit and Umar credit. No, this is not. Sales returns debit and Miriam credit. No, we are making in Miriam book. So we are recording in Miriam book. So this will be recorded. Sales return will be recorded, but in Umar book. So this is not applicable, right? So Umar debit and purchases credit. Yes, exactly this one. So this is correct. And Miriam debit is sales return credit. This is incorrect. So your correct answer is C. So let's move on to question number 5. Okay. Ben sold goods to debit for 900. Right? Ben sold goods to debit for 900. In which books of prime entry would debit record this transaction? Ben sold goods to debit. So in which book of prime entry would debit record? So this is purchase for, this is cash purchase for debit. This is cash purchase for debit. So cash sales or cash purchases are, so number one, cash book, general journal, purchases journal, and sales journal. So this is a sale for Ben, but this is a purchase for debit. Purchase and cash purchase. Cash purchase for debit. So 900. So in which book of prime entry would debit? So ultimately this is a cash purchase, and cash purchases and cash sales are recorded in cash book. So he will record this into the cash book. So this will be the answer. Rest are incorrect. So the last one, 6, we will be doing, and we will finish this. So a petty cashier has, let's move on. A petty cashier has received 100 from the chief cashier. One is a petty cashier, other is a chief cashier. Actually, what happens? Cash book. One is a cashier, and cashier maintains cash book. Means he look after cash and bank both, and whatever the money is paid outside to or inside outside customer or whatever is received, that all is maintained by the cashier and by the cashier in cash book, right? All receiving from your customers or payment to your suppliers and different payments, all outside payments, those are recorded by the cashier. But cashier does not involve in day-to-day small petty expenses payment within the business. In business, what happens? It is normal that sometimes the employees need some stationery, so they need to buy a small stationery, small ballpoint. There might be some traveling expense. Someone has gone to deliver something, or some courier expenses, small petty expenses. So cashier is not supposed to do them. So we appoint a petty cashier normally, and he is responsible to do all petty expenses, right? So when petty cashier receives money, actually what is the procedure? Procedure is cashier gives money to petty cashier, right? And when he gives money to the petty cashier, record, the entry is made as petty, the cash come into the petty cash. If I am saying 10,000 and it goes out from the cash book, so this entry is made, right? And how this entry whenever he pays some expenses, so he petty cashier made those expenses from the cash book. So the petty cashier has received 100 from chief cashier and 10 from an employee who had made a private calls on business telephone expense. So what he has, so how much he has received? 100 he has received from the cashier and 10 he has received from some employee. So total he has received in petty cash 110, and the 100 rupees were given by the cashier and 10 were not by the cashier, but he has got money, he has recovered some expenses. So what? The telephone expenses. So what he will do, he will telephone expense, he will credit by 10, right? So this will be the normal entry, because when the telephone expense bill will come, so he has already deducted that amount from recovered that amount from, so this whole 110 will be appear in his book. So now how would these amount be recorded in the petty cash book? How would this amount be recorded in the petty cash book and the cash book? Now you have to tell them in petty cash book and cash book, right? So number one, A. So one thing is for sure, this he is getting 110. So in petty cash book, he will debit this petty cash. So in petty cash book, he is receiving 0. So this is incorrect. So the whole, this one is incorrect. Is receiving 10? No, this is wrong. The whole is 10. He is receiving 100. The whole, no, he is receiving 110. So this whole is, so he is receiving basically this 110. So how much? 100, this much from the, they will credit petty cash book. So the option number D is correct. So guys, thank you very much. Hope you have understood these questions and their solution. If you have any confusion or any clarification or any doubt, you can write to us, and we will try to reply you very quickly. So that's all for today, and thank you very much, and bye for now.